But let's talk about Rajratan Global Wire. The company reported a mixed set of numbers. There was minor improvement in the top line. However, margins are still below that 16% mark as well. We have Mr. Sunil Chordia, who's the chairman and managing director of the company, joining us to discuss the quarter gone by in more detail. Thanks a lot, Mr. Chordia, for joining in. Always a pleasure speaking with you. You haven't yet uploaded the presentation volume details to the exchanges. So for the benefit of our viewers, if you could tell us what the volumes have been in the second quarter, the first half, and where does your guidance stand at when it comes to this year? Because earlier you had said you're targeting close to 1.25 lakh tons for the entire year.
Yeah, so Mangalam, this quarter we have done 26,500, close to that volume. And our first half volume stands at 53,000 tons. And I think we'll be able to achieve a target of close to 120,000, which I have been telling. 20% growth in volume this year we are targeting, and we are making efforts to achieve that.
So all right. That's a decline from the 1.25 that you were targeting earlier, right?
Yeah, that is because of the geopolitical situation, the numbers in the global market where we are exporting our product are not so good. And also for last 2 months, we see some pressure on the automobile sector and pressure on the volume in the tire business also. Yeah.
All right. Hi, Mr. Chordia. Good morning and good to see you.
Hi, Nigel. Hi, Nigel.
So 1.2 lakh is what we'll hold you at. And in terms of a revenue number, since you're pulling back your guidance by approximately 2.5%, 1,050 revenue should be possible.
No, the prices have gone down lately. Oh. So, it will be close to 1,000 crores. This year we should be touching 1,000 tons. Yeah.
All right. What was impressive in your past quarters numbers is at least the gross margins improved to around that 38% from around the 35.5%. Though EBITDA margins continue to be in that vicinity of around 15.5%. Earlier,
on a consolidated basis, yes.
Consolidated basis. Earlier, you had hinted that you would like margins to be in that vicinity, I think, of around 15 to 16%. So do you hold on to that guidance for the year? Given demand, given the operating leverage, should you be in the vicinity of 15 to 16%? I ask you this because first half of the year, it's 14.5%.
Yeah, so consolidated, we will still target 15 to 16%. And that is because there is a pressure in the margin in Thailand business. China is very aggressive in global market. So we are not able to achieve the targeted margin in Thailand business.
And despite that, you are confident of...
Despite that, you are confident 15, 16, yes.
15 to 16%. On Thailand itself, you had said that you've changed your strategy. You're looking at market share more than margins. So how has that panned out? Because the margins have declined. Have we seen an increase in market share? Because last time, it was close to around 26%.
Yeah, if you compare, Thailand, our volumes have grown 27% in the first half compared to the last year. So we are doing that, yes.
All right.
So what does that market share number stand at right now? Because last was 26%.
In Thailand, last quarter, our market share was little above 30%. In Thailand.
Little above 30%. So you are gaining market share.
What about India, sir? I recall when the stock was getting a premium, you provide to the tire makers, but at one point of time, Rajratan Wire was trading at a premium in comparison to even the tire makers. But that was because your market share was rock solid. This is on a stock market valuation perspective. Currently, what is the market share that you're holding? I think you had hinted at the start of this year, it was 37%, if I'm not mistaken.
It's back to 42% in the last quarter. That is what data we collect. Yes, but we are in a competitive business. So our competitors have also increased capacities, and there is a competition to gain market share.
So from a long-term standpoint, then what is your margin trajectory likely to be? Because it's competitive out there, for you to hold on to your market share, you'll have to give up some margins, right? So a sustainable basis over the next, say, few years, what are your margins likely to be? And Chennai plant, has it started producing finally?
It has started producing in last quarter. So that project will come up in phase manner. So first phase has started. And we have done around 1,000 tons of sales from Chennai in the current quarter, which is in the volume here. And going down the line, we will keep on increasing the sales from Chennai facility. The sustainable margins will come when we are able to sell major quantities in global market. for which we are making efforts. We have started a company in USA to market our products in USA. We are also have a representative office in in Europe, and there are some green shoots of approvals. And once we pick up the volume, and of course this business takes time. Picking up volume will happen not in 1 month or 2 months. It will take 2 years, maybe 1 or 2 years, and that is when we think that we will be able to make a sustainable margin of 16, 17, 18. Yeah.
Okay, all right. You've got a strategy in place. Tough times are trying times for you, but you have battled it before. So we wish you all the best, and we'll hold you to these numbers: 1.2 lakh tons, 1,000 crores of revenues, 15 to 16% of margins, and holding on to that market share of around 42%. Thanks a lot, Mr. Chordia, for joining in and filling us in with all of those details.